Good afternoon, everyone. Yes, good afternoon. I think there is some parallel class going. I've heard some student listening to other classes. So if you're listening to other classes, please continue that because there should not be any clash between these two classes. So this class is specifically for the revisionary classes, which is meant specifically for students who are writing for January, people who are writing for May. Okay, that was of tech support. Fine. So this majorly people who are writing in May, if you are attending this, then it will be very fast for you. It will be because the classes what we conduct here is very early fast track mode. So if you want in-depth classes, you should attend the classes which is scheduled for May 2025. Okay. So let's start. We were discussing on input tax credit. So we'll continue on input tax credit. What is input tax? We know it. We know the basics of, we have understood whatever are the criteria for section 16, right? So what was our discussion due on the apportionment of credit? So we'll continue on that topic today. Apportionment and block credit. This also we had started. So let's quickly revise it. And wherever you tell me that you have to stop, we'll stop because we have to continue from last class. So basically, if the credit is for business and non-business purposes, if it is for used for business purposes, then it is wholly taxable and it can be zero rated supply. So when a business does any transaction which is wholly taxable supply or it is a zero rated supply, then the input tax credit is claimable. Why is it claimable? Because you are using it to make a outward supply. You are using it for a business, which means inward supply is input tax, outward supply is business. So outward supply, what you are doing, you are into the business of wholly taxable supplies and zero rated supplies. So you will get the credit of input tax. Or if you are doing a business which is non-taxable supplies or exempt supply, then you cannot claim your input tax. So your input tax credit, once you satisfy the conditions of section 16, you have to check this sections which is given under section 17.1 and 17.2. So if any input you are using for business which is non-taxable or exempt, that you cannot claim. And whatever you are using for non-business purposes, that is also not claimable. Okay, so if any company, any organization who's buying something, and if they are using the input for business purposes, even in business purposes, if they are doing any exempt supply, okay, on that, they cannot claim the input tax credit. Now, and for non-businesses, definitely they cannot. So you have to see taxability and you have to see if it is for business. If it is non-taxable and it is not for business, on that, you can't claim the credit. Okay. Now, what is zero rated supplies? We are telling, sir, that for zero rated supplies, ITC is claimable. But for exempt supplies, ITC is not claimable. Why is that so? What do you think should be the logic? Because even in zero rated supply, as the name suggests, it is zero rated. So there is no GST on the outward supply. And even in case of exempt, it is exempt. So what should be the difference, or why there is a difference between zero rated and exempt supply? Zero rated supplies are supplies made to SEZ, is what Rishabh Gupta is saying. And Swati is saying zero rated is included in GST as a rate of percentage, but exempt or non-taxable supply is fully out of GST. Okay. Zero rated supply, Krishno is saying that zero rated supplies are such as export or SEZ, which has GST at 0%, but exempt supply are those which don't include GST. Oh, okay. Any other answers? Sejal is saying zero rated supply has zero rate and exempt supply are supplied in which no ITC is available. Right. Correct. So the point is that both there is no output tax. Correct. When you sell zero rated supply, there is no GST which you have to collect. And even in case of a exempt supply, you don't have to collect any GST. The difference, why they have given a differentiation is because section 17 says when you make a zero rated supply, you don't have to reverse the input tax credit. So it's a special category of exempt supply. You can say that because even in exempt supply, there is no tax payable. And even in case of a zero rated supply, there is no tax payable. But the difference is in case of a zero rated supply, input tax credit is available to you. But in case of a exempt supply, input tax credit is not available because when the government gave you the credit, okay, they expected that you will generate something. Now, when you are not generating any revenue for the government is saying reverse the input tax credit. The credit chain has to follow, right? That when I am claiming the credit, you should generate something. You should generate tax on the outward supply. Now, if you're not generating outward supply because your product is exempted, because your activity is for non-business purposes, then reverse the input tax credit. Okay. So that is the concept of zero rated. But in zero rated, there also we don't pay any output tax, but input tax, they're saying don't reverse because for a zero rated supply, there's a special benefit given because we need to encourage SEZ units. We need to encourage all the exports which has been done. So for that purposes, all zero rated and that is all export and supplies to SEZ are considered as zero rated supply. And on these supplies of zero rated, input tax credit can be claimed. So what do you think they will do by claiming the credit? They will claim the credit, fine, because they are allowing us to claim the credit. Now, when they are making export, they are not paying any tax because export is zero rated. So then what will they do with the credit? Sejal, any idea you have? Because you are given a correct answer on difference between zero rated and exempt supply. So you know that for zero rated ITC is available. So what will they do with the ITC? Utilize for payment of output tax liability, but they don't have any output tax, right? अगर output tax है ही नहीं, there can be companies who are doing only export, correct? And if a company is doing only export, then they will not have any taxable thing itself, any tax liability to which they can offset it. They may have reverse charge mechanism, but we know for paying reverse charge mechanism, we cannot use the input tax credit. So then what do you think they can do with the input tax credit? So if supply of alcoholic liquor is made to SEZ, alcoholic liquor for human consumption is outside the scope of GST, correct? तो उसके ऊपर तो GST it will not come at all. Used for further transactions. There's no transactions at all. They reduce the price of the product. No. How can they reduce the price of the product? Because when they are purchasing, okay, you are selling to a person who will do the export. So will you charge GST to him or no? So Ayushi is saying they reduce the price of the product so that foreign people will purchase more. As it is cheap, it increases Indian export. But how will that become cheap? Because when they purchase, on that GST is being charged. Correct? When they purchase, GST will be charged. So that will become their cost. So how is the pricing getting reduced then? Sir, ITC on export or supply to SEZ cannot use for their business purpose. Not, I didn't understand your question, Bhumika. Payment of direct tax on company income. So you're saying this credit they can utilize for income tax? No, no. GST is separate law. Income tax is separate law. It is not one nation, one tax is not to be taken so seriously that all the taxes are subsumed, right? Only those taxes which were there as indirect taxes, those have got subsumed. Direct tax is an income tax that is still separate. That and this you cannot offset. Then they will get ITC. Correct. ITC है. ITC का क्या करेंगे? What will they do with the ITC? Okay. Shoaib has given a correct answer saying that they will get refund of the credit. So just giving the credit and telling that don't charge anything on your export supplies because you're zero rated will not make any sense unless this input which has been accumulated or lying with them is given to them as a refund. Okay. So when we make supplies to anybody who's exporting, we will charge normal taxes so that they will accumulate as input tax credit. And this person, when he exports, okay, when this person exports, he will not charge any GST. He will not charge any GST and they will claim for refund. And yes, Rishabh, they will get refund in cash. So whatever is the input tax which is not getting utilized, there has a formula, there are set rules, there is set section under the GST law, wherein these persons, when they are exporting, okay, they can show the input tax credit and they can claim the refund for this. And yes, they will get refund in cash itself. They will get it in their bank account. Clear? So how this will work is, I will show you. Not able to write your So when any input is there and you are purchasing something. Now, when you purchase, you will claim input tax credit, correct? Now, you'll keep claiming input tax credit. Now, when you're selling, if on this sale there is no GST, this input tax credit you cannot utilize because there has to be some output tax payable. Only then you can utilize the input. But you're not able to utilize it because there is no output tax at all. If there is no output tax, then input tax credit cannot be claimed. So whatever is the input tax line, you have to claim refund for this and the refund will be granted by the authorities. Okay. Now 17, we understood business, non-business. Block credits, we are going, credits are not available even if it is used for business. Section 16 said that you can claim the credit, but now section 17 is saying that boss, even if you are using for the business, some credits I will not give you. What are those credits? Those are credits in relation to purchase or general insurance, repair, leasing, or renting or hiring. So even if you buy, okay, you have bought it. What you have bought? You have bought any kind of a motor vehicle wherein the seating capacity is less than 13 people, or any aircraft or vessel. If you have bought it, you will not get credit of this. Sir, car is used by the director, but director is using it only for the business. Still, you will not get the credit. Okay. So any car, any vehicle which has more than 13 people seating capacity, that will be allowed. But a car which is having a seating capacity up to 13 people, okay, with driver seat, that is the maximum which you cannot claim. Above 13, if you have 14 seater, there you can claim. But if you are buying a car which is up to a having seating capacity up to 13 seats, it is not restricted to car. It says any motor vehicles. So it could be a truck, it could be a jeep, it could be a minibus. If the seating capacity is up to 12 people, then you cannot claim the credit. If you're using it for transportation of your employees, still you can't get it because they've said outrightly that purchase you cannot claim of motor vehicle and any kind of a upkeep you're doing. What could be the upkeep? It will be general insurance, repairs, leasing, renting, hiring will not be available. But you can still claim ITC for this is the exception where you are making further supply. You are into the business of buying and selling cars. There you can claim it. If you're a trader who is dealing in cars and having a showroom, there you're buying it to sell it. Only there it will be allowed. Or if you're using it for transportation of passengers, like a cab company who will buy it for transportation of passengers, he can claim it. Or you are using it for training purposes. What training? Training of motor vehicles. Like you're using, you might have seen on the roads that there are cars which have a driving board like that, which teaches you to drive the cars. For them, credit is available. Or if you are using that motor vehicle for transportation of goods, only then you can claim it. Okay. So let me ask you a question. Will this airplane companies, Air India, they are buying a aircraft. Okay. Will they be able to claim the credit of the aircraft what they have bought? Sejul, what is your question? How will the refund help? So if the input tax credit comes to them as a cash, right? So that's a benefit for them, no? So that much of extra income they are getting without having a sale. So government is giving that benefit that whatever is your cost, that will come down. If that money is shown as a cost, that expenses on which ITC is claimed, and to the extent of ITC, if it is reversed back or it is come to the account, then their costing can be reduced to that extent. That will help, no? No, Swati, transportation of goods is for all because motor vehicles also be used for transportation of goods, right? So that is also covered. Yes, they will be get ITC. Everybody is saying yes. What will be the use of refund? Okay, because making taxable supply of transportation of passengers, correct? Because they are using the aircraft for transportation of passengers. That's why they can claim the credit. So any of these, like a cab company has buying a car and giving it for cab renting, cab leasing, they can all claim the credit. So only in such four cases they can claim. For anything else, if a company is buying a car and using for transportation of employees from home to office, office to home, now can they claim it? In the second example, I'll repeat it. A company is buying a car. Car has been having a seating capacity of six people. Maximum you have six or seven. So normal car they bought. On this, can they claim the credit? The purpose of this car is for transportation of employees from work to home, home to work. Bhumika is saying yes, it is available because it is used for transportation of persons. Okay. So that's a very, very good interpretation. But when you say transportation of passengers, doesn't say transportation of persons. So it just says transportation of passengers. Now, employees are not passengers. Generally, passengers will be third party from whom you will collect some charges. Even though that is not specifically mentioned, the general understanding is if you are using for transportation of passengers, there you will get it. Even if it is used for business, Rishabh, you will still not get it because they have specifically restricted saying that in this for further supply, the car which you're buying for employees for their use, it is not for further supply of such motor vehicle or such vessel or such aircraft. That's why you will not get credit of that. Okay, even though it is used for business legitimately, everything is fine, but still you will not get the credit because that is what is called as blocked credit. Okay. Then you can still claim ITC on expenses where manufacturer of motor vehicles vessel, if it's a manufacturer that we have said, and if it's a supplier of general insurance, then he can claim it. Which one? That general insurance and things like that. Who can claim the credit on general insurance? If it's a supplier of insurance company or manufacturer of motor vehicles, then he can claim. What if the car is used for transportation of employees, for which the employer is charging some fees from employees? Yeah, then it becomes a little different situation that you are supplying that and using it for transportation of passengers. But generally, companies don't do it because if companies charge anything from the employees, employees will not pay, right? Because they'll say instead of paying you, will come and pay for our own vehicle. So that generally doesn't happen. But in any case, Rishabh, if that case happens, then yes, they can claim the credit and say that we are doing actually transportation of passengers. But you see, that is not so easy because when you take the car, you have to have that registration. There's white board, yellow board, and all, right? So if you have a white board, you cannot use it for transportation of employees. So that complication also you have to see whether you are complied with the regional transport officers' compliances. If it is compulsory, complying statutory obligation, I'll come to that. Even if it is a compliance obligation, still purchase ke upar you will not get. You will get it for hiring, but for purchases, you will not still get it. Yes, yellow number plates are required for transportation of passengers. So if you have taken a yellow board and you're collecting some money from the employees, then it may be possible. Okay. Apart from this, if you're doing any leasing, here it is, where it is leasing, renting, or hiring of motor vehicles. You are taking a cab. You're not buying a car. Now, buying a car is not available. Insurance and repairs and maintenance is not available. But now you're saying, okay, I will not buy the car. I will hire a car. When it is available? No, still it is not available. Any kind of leasing, renting, or hiring of motor vehicles, vessel, or aircraft credit is not available. The exception is when it is used for output category, output of the same category. That is, you are taking it on lease and you are giving it on lease to somebody else. If you are into the leasing business, and taking leave from somebody else, then credit will be available. But in all other cases, you will not get it. So you are renting a car, you are taking from somebody on rent, then that credit will be available. And where it is obligatory, where it is compulsorily required by the law. Obligatory means compulsorily required by the law. Like in some states, some labor laws are there, wherein if you are running a BPO, then generally BPOs run at the night shift. So for their safety, they have to hire a car and give it to the employees. So in that case, what happens? They have to use a car for giving it to their employees. There, they can claim the credit because it is obligatory. Internal policy a statutory obligation? No. Internal policy is not a statutory obligation, Krishna, because it says it's a statutory obligation, which means the obligation should be from the law perspective. Law से आना चाहिए कि आपको ये कैब हायर देना जरूरी है. That brings us to the question then, is purchase, if I give obligatory, if I purchase, I should get the credit, but unfortunately, they have not given that. They have specifically said that motor vehicles for transportation of persons having approved seating capacity of not more than 13%, except when they are used for making following taxable supplies, which is further supply, transportation of passengers, imparting training. So their statutory obligation doesn't come. So if you're buying it, and if there is statutory obligation, that's why you bought it, then still you will not get. So you should always hire it. Only then you will get the credit when it is a statutory obligation. Okay. Then next kind of ineligibility is any kind of food expenses, food and beverage you're giving to the employees. You give it to your employees, you give it to the clients, you give it to anybody. Food and beverages credit is not available. Okay. Food and beverage, the GST also is minimum. The GST on food and beverages only 5%. Okay. Then any kind of a outdoor catering, similarly food you didn't buy, but you have engaged a catering agency, that is also not allowed. So directly, indirectly, any kind of food and beverages, whether you go to the restaurant and are get it by a caterer, still credit will not be available. Then any beauty treatment and health services, any kind of beauty treatment if an employee is undergoing, still credit is not available. Health services, credit not available. Cosmetic and plastic surgery, still credit is not available. Okay. On these three health related matters, beauty treatment, health services, cosmetic and plastic surgery, credit is not available. And again, related to health, life insurance and health insurance, both credit will not be available. Exceptions where such services are used for making taxable outward supply. जैसे there is a life insurance company itself who is taking the services of another life insurance and selling the life insurance policy. There they can claim it. But other than that, who is not under the same line of business, okay, who is providing different category of business, he cannot claim it. Then exception to is statutory obligation. यहाँ पर भी again, if what could be a statutory obligation, there is a factory. And Factories Act says that if you have more than 50 employees, you should have a canteen and you should provide food to the employees. Then it's a statutory obligation. In that case, that credit will be available only if it is a statutory obligation. Yes, Sager, in case transportation services provided to the employees, then it's a perquisite. Then under Form 16, whatever you give, you will make a disclosure. Correct. So if it is a statutory obligation, okay. If it is non-statutory obligation, even if you have shown under Form 16, you will not get the benefit of this. Any doubts here? If there's no doubts, can we proceed further? In case of outward supply of beauty treatment and plastic surgery services, what ITC will be allowed? So if anybody is providing beauty treatment services, okay, then what we are saying, a beauty treatment credit is not available. But if you will get the credit of beauty treatment when if you are under the same outward supply, if you are a parlor, okay, then you will get the credit of beauty treatment, wherein you are engaging somebody else to do a beauty treatment where you are not available, then that credit will be available because you are into the same business. And in case of plastic surgery also, in when you're providing plastic surgery and engaging the services of a consultant, then in that case you will be in a position to claim the credit. Okay, Divya is saying, please explain the the exclusions. The exclusions are: exception one is if you are doing the same business. Now, food you are buying, credit is not available. Now, a hotel buys the food, and what is its business? It is supplying food itself. So, it is buying food and supplying food, then it can claim the credit. Okay. Similarly, outdoor catering, but of course, the rate of food as a matter of rate is they cannot claim the credit, but five-star hotels can claim the credit, correct? Because we have a limit saying that any person who is supplying food, restaurant, the rate is 5% without ITC. But if it is a five-star hotel, then the rate will not be 5%, become 18%. Now that five-star hotel, when they are buying food and using it, on which GST will be charged because some products, packaged products, GST is available. They can claim credit on that packaged food because their outward supply is same food and beverage business itself. Okay, that is exception number one. Exception number two is when it is statutory obligation of the employer to provide to the employee. What? So there is obligation to provide food and beverages. Generally, statutory obligation will be for food and beverages to provide health insurance. When then they can claim the credit. Okay. Then other services are in relation to membership or a membership of a club, health, fitness center is of course not available. And travel benefits extended to employees on vacation, such as leave or home travel concession. That is leave travel concession. Whatever charges is being paid for that also credit is not available. Same exception if there is a statutory obligation of an employer to provide it, then it is allowed. Otherwise, all of this membership of a club, health, fitness center, travel benefits extended to employees on vacation, such as leave or home travel concession, is again credit not available. Okay, so the relevant questions here is food and beverages can be provided as mixed or composite supply. Yes, if it is into that business, then they can claim the credit. Swiggy and Zomato, no. Swiggy and Zomato, they do not purchase food. They are only a Swati, Swiggy and Zomato, they don't purchase food and sell food. They are not buyers. They cannot do like that. They are only aggregators where they will help you to find the restaurant and help in delivery. They are not buying from anybody. They are only connecting the sellers and buyers. And for the delivery, whatever delivery charges is there, platform charges is there, that is what is their income. They are not buying and selling, so they cannot claim any credit of that food. Okay. Then what is the next kind of restricted services is works contract service. This is very important. Generally, we feel that if you're running office, now instead of taking office on rent, you will think that I will construct a building. I will take it on rent and I will give it also on rent. So can you claim the credit on the building? Because when you construct a building, GST will be charged on cement, steel. Okay, cement, steel are the major ones. So can you get credit on this? Yes, if it is for further supply. So you tell me, I have given you the facts. Do you think you cannot give answers like this? Food and beverages purchased by railways or airlines authority for their passengers. Yes, there they can claim it, saying that yes, I have purchased food for supplying it to my passengers. There they can claim it because it is in the same course of business. Even though IRCTC is not in the supply of food, but yes, being that when they are collecting ticket on that itself, food value is included, so they can collect. ITC and construction service is not available in case where expense is capitalized. Correct. So any kind of purchases of works contract, that is what this service, this category is saying, that any kind of a works contract, which is meant, what is works contract? Works contract is defined that a contract for building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repairs, maintenance, renovation, alteration, or commissioning of any immobile property wherein the transfer of property in its ground, okay, wherein transfer of property in goods, whether as goods or in some other form, is involved. So any works contract which you are taking, what is a works contract is defined, it is include any kind of building, repair, construction, anything in relation to what, in relation to an immobile property wherein transfer of property in goods is involved, that is, first goods is involved and then it results in an immobile property. So you are buying something and constructing something which becomes an immobile property. You're constructing a office building, you're constructing a godown, you're constructing a warehouse. All of that is a works contract. Now, works contract serve used for construction of immobile property, on that credit is not claimable. If it is an input service for further supply of works contract service, unless the exception is if a person is buying it and selling that building, then he can claim it. Who will buy and sell? It could be a real estate developer or a builder who is constructing it not for his own business but for others, then he can claim the credit. Then immobile property is plant and machinery. Suppose you are constructing something and it is called as a plant or a machinery, then credit is available. What can be an example? Indian Oil Company. They have big oil tanks. They are constructing an oil tank and it becomes a immobile property. The restriction says that any works contract service for construction of a property is not allowed. But for a oil company, that big tank is a plant because that is where all the oil will get stored. So when it is a plant and machinery, even though it is a works contract, they will still claim the credit because it's a plant or machinery. Okay. And third exception. What is the third exception? Third exception is when ITC in respect of construction services. So ITC in respect of construction services, which is not capitalized, whether for immobile property or plant, is allowed. Which means if you are expensing it off something, which you are not capitalizing it, matlab, which one you will expense? So if you're constructing a building, will you put it under expense? No, that will be under your fixed assets itself. So when you put it asset under the fixed assets, or when you show it as an asset in your balance sheet, that is called as capitalization. So when you capitalize it, input tax is not available. When you do not capitalize it, ITC in respect of construction services, which is not capitalized, जो आप capitalize नहीं कर रहे हो, it could be what? It could be both immobile property or plant and machinery, is allowed to all the recipients. So when you're doing a kind of repair and you're expensing it off in your P&L account, how will that be decided? That will be decided by the accounting standards and auditing standards. They will tell you whether you should capitalize or not capitalized. But if that standard says you have to capitalize and you have capitalized that asset, then on that credit is definitely not available. Okay. But if that standard says that no, you don't have to capitalize it, you can expense it off, then you can claim the credit. Example I've given here is routine construction related services like repairs, maintenance, renovation of office, plant and machinery, or any factory building. You can claim credit of that. Okay, so works contract basically is not available. Exception is if it is an input service for further supply. And second is if this is immoved property, the plant and machinery. And third is which is not capitalized. ITC on expenses portion will be available as a credit. Now, what is a plant and machinery? Plant and machinery means any apparatus, equipment, machinery fixed to earth by a foundation or structural support that are used for making outward supply of goods. So any kind of machinery, a lift you buy is also a plant and machinery because you have to use it for your transportation of goods or for transportation of people. So it's a plant and machinery. And uh, anything which is fixed to earth by a foundation or structural support that is used for making outward supply of goods and include such foundation. So a passenger lift will not be a plant and machinery, but a uh, goods lift, which is used for transportation of equipments, that will be allowed as a plant and machinery because passenger lift is not used for any further supply. So there for passenger lifts will not get for machine lift or for lift which is used for transportation of goods that will be allowed. Then any plant, any machinery which you're using now, you have bought a machinery to make it use, you have to fix it to the earth. So will it become works contract? Yes, it will become works contract because it becomes a immovable property. Now, once it becomes an immovable property, still you can claim a credit because that machinery is to not to shake. It should not wobble. It should not be vibrating. That's why you have to install it in such a way. So even though if you install it, but if it's a plant and machinery, credit is still available. Now, plant and machinery definition specifically excludes land, building, or any civil structure. Telecommunication towers. Telecommunication towers, you can never call it as a plant and machinery for the purpose of GST. And any pipelines, okay, laid outside the factory premises, petrol pipelines or oil pipelines, anything which you are setting up. Now, the pipelines which is inside the factory premises, you will get the credit, but which is outside the factory premises, on that credit will not be available. Okay. So that is the definition of plant and machinery. So we understood works contract ke liye you will not get the credit. Now, if you are constructing any, before that there's a question. If a builder or developer constructs building and sold that building, then he can claim ITC. Correct. What is apparatus? Building apparatus means apparatus where it says apparatus means a technical equipment or a machinery needed for a particular activity. Same like a plant and machinery, when it is for a particular activity, then it is called as an apparatus. Apparatus example means a fireman wearing breathing apparatus. So that's a meaning of the apparatus. Now, next exception we are done. Another kind of service which is blocked is construction of immovable property on own account. Like how we had said works contract services you're taking and doing a construction, then you are becoming smart. You're saying, okay, we will not do works contract, we will buy ourselves and we will construct it. Then also credit is not available. It says that construction of an immovable property on own account. If you are doing a construction on your own account, still credit is not available. What are the exceptions? Again, if there is any construction of plant and machinery, if you're constructing a plant and machinery, then you can claim the credit. Okay. Or ITC in respect of construction services. ITC in respect of construction services, which is not capitalized. Again, some expenses which you're doing, that is credit is available. And when the construction is not on own account, again, a developer or builder who's not constructing in own account, then he can claim the credit. And plant and machinery, he can claim the credit. But if he's doing anything on his own account, he's doing a building, a factory, a warehouse, a godown, which he is using for his own business, credit will not be available. Which exception, third one, Sejal? If we construct the building and supply to any relative, then credit available. So if you're supplying it to anybody, doesn't mean just supply. Supply should be with consideration. So you construct a building for others and you sell it and you're getting value for it. Now that person can be anybody, right? You will get the credit of that. But you should remember that when we are talking about spoken about supply, right? Is it a related party and price is not the sole consideration? Then you have to go to valuation rules. Okay. The value what you said will be influence price because you want to claim the credit. So that's why you will give it to your relative. But if you give it to your relative and collect the market value and you have to prove that market value, then the credit will be available. So if my purchase any office building and I'm not capitalized the GST portion, then can I claim ITC? So, Sujay, when you purchase any asset, okay, the tax portion you can never capitalize it. So, if you capitalize the tax portion, then of course you cannot claim the depreciation. But generally, you will not capitalize the tax portion. Here, in this scenario, what they are saying is you buy a set, you buy that office building and you're not capitalizing the GST portion, that's fine. But you are capitalizing the building, no? Still, you will not get the credit because when you're buying any office building, it is a works contract or any kind of a construction for own use. So your credit will not be available. So any kind of real estate which is involved either on your own account or getting it you the help of a works contractor, still credit will not be available. So can we claim depreciation on the tax portion? Yes, since you are capitalizing it and credit is not available, so you will capitalize the tax portion also. So in that case, you will get the depreciation. No issues with the depreciation there. Construction for own account means self construction. Yes, self construction. Because what people will do is generally people don't do their construction by their own, they give for works contract. So when we give for works contract, we know that credit is not available. So people have become smart. They will tell, okay, we will not give as a works contract. We will only construct it. We will give separate labor contract. We will give separate materials contract, and we will tell we are only constructing it. Still, you will not get the credit of it. Clear with your question, Sejal? Okay, let's proceed. What are the other instances of block credit? Inward supplies charged to tax under composition scheme, because a composition person from whom you're buying, he should not charge GST first of all. That's why this is blocked. So when you're purchasing from any composition dealer, GST credit is not available. Then any kind of inward supply received by a non-resident taxable person. A non-resident person is coming to India and doing business. So he's a non-resident. That's why he will not get the credit. The exception is the tax paid on imported goods is allowed. So when he imports some goods, okay, he is importing some good, then credit on such goods will be available. But if he's importing services, again, he has to pay RCM, no credit is available. Locally, if he's purchasing something, he will not get the benefit of the GST. So basically, a non-resident individual generally, because if a non-resident is setting up a company in India, he will have following the Companies Act, correct? So in that case, the if he's setting up in India, that company becomes a resident in India. So they can claim the credit, but specifically they are talking here about a non-resident individual, because a non-resident, if he's coming to India and selling, then it will become a threat to the Indian. That's why they have said that a non-resident coming to India, only those goods which you have bought, imported, on that we will give you the credit. Locally, if you buy, credit will not be available. Then any goods or services used for personal consumption, any goods which you're using for personal usage, not for business usage, credit is not available. Next point is very, very interesting. Any lost goods, stolen goods, destroyed goods, goods that you're writing it off, goods you're disposing it off by way of a gift or a free sample, okay, then credit is not available. Need note each of these points. It is not within your control, but still the law says you will not get credit on this. That is any kind of a lost goods, stolen goods, destroyed goods, goods that are written off, saying that, okay, it's become waste, you have written it off. So will you claim the credit on that? Yes, because when you bought it, you did not know that you will write it off. You had bought it to use it. Now, over a period of time, it's become outdated, it becomes scrap, and you're writing it off, you're destroying it off. Still, credit on such goods will not be available. With the same logic, the goods when you had bought, we had given you full credit. Now, if you don't sell the goods and you do something in between, credit has to be reversed. Okay. Sir, somebody has stolen my goods. I've lost it. Still, government is saying, I am not worried. You should have maintained your factory in a proper manner that nobody should have stolen it. If it is got stole, you have already made a loss. Help me also. Give me also some more loss. Reverse your input tax credit. Okay. And if you're disposing of some goods by way of gift or free samples, generally we see in pharmaceutical companies, we give off goods as free samples, right? A doctor gets a lot of free samples from the pharma companies. On all of that, ITC is not available. Then the last point is tax paid in fraud cases, detention and confiscation. When the goods have been confiscated, when the goods have been detained, and when they have established that you have done any fraud, these three cases are separate cases. It could be a case of fraud, it could be a case of detention of goods, or it could be confiscations. In all of these cases, credit is not available. Okay. So what could be the reason behind that ITC only on imported goods can be claimed, not on services? Because only goods which they are bringing and they're selling, they can do it. Now, if they're coming to India and providing services, then they can, no? Then they can take uh, any services that is not defined. Okay. But when they say inward supplies received by a non-resident taxable person, they want to give him very less credit. That's why they have restricted the credit for the goods what they bring in. Anything else will not be available. Can we say that stolen goods, lost goods don't constitute a supply? Correct. They do not constitute a supply because it has been sold. It has been lost. That's why it is included in Annexure 1 also because you are disposing of those goods. Correct? No, there disposing means you should actually go it. But yes, in case what you're saying is right, in case of stolen goods or lost goods, there is no supply. Okay, therefore credit is not available. Okay. Now there is some clarification. When we say free supplies and things like that, there could be various schemes under free supplies. First is if you are, so till now we saw all the block credit. So all of this was block credit. On this credit is not available even if you're using for your business. Except the exceptions, everything else is a block credit. We will not get it. Now coming to the various schemes. Now, some companies give samples and free gifts. ITC shall be available to the supplier if the activity of distribution of gifts or free samples forms within the scope of supply of Schedule 1. Because in Schedule 1, we have said that if it is any disposal of goods, on that you have to pay GST. So if you are paying GST to the extent of Schedule 1, then ITC you don't reverse. Because if you reverse ITC also and you tell me to pay also, then there is a double taxation. Because credit also you're not giving and output also you're collecting. That is not correct. So that's why they're saying any samples and free gifts which you're giving, which is falling under Schedule 1 as disposal and on which you have to pay GST. Then if you're paying outward supply, ITC don't have to reverse. But if you're not paying anything there under Schedule 1, then here you have to reverse the ITC. Second is there could be a scheme that samples and free gifts are given. Now some pharmaceutical companies give saying that, okay, you buy one Vicks, you'll get one more free. 1+1 offer. In that case, is the second one actually a sample or a free gift? So you have to reverse the ITC. The clarification says no. ITC shall be available to the supplier or input services and capital goods used in relation to such supply, as such offer is treated as a mixed supply or a composite supply, which means if one bottle is being sold for 50 rupees plus one is given, the seller has decided in his mind that the cost for this is 25 for me from a selling perspective. So when they are bundling it together, it is a mixed supply. Then whatever is the mixed supply, it means that I am only giving the two products at the price of one. I'm not giving one and giving the other one on the free. When they're giving one plus one, it means the price of both the products is one. So there is a consideration. So ITC reversal not required. Okay. What happens in case of discounts where buy more, save more? We had seen in the previous chapter, wherein you buy more, you'll get more discount. There also he is entitled to full credit because the consideration is different, but it is not that there is no consideration. When we have to do reversal, when there is no consideration received, only then you have to reverse. But in case of a buy more, save more offers, credit is fully available. Now, discounts could be of two types. It could be primary discounts or it could be secondary discount. Primary discounts are that which is known at the time of supply itself, that you will get this much of discount. Secondary discounts are that which is not known at the time of supply, which you will know at a later point of time. Now, there is no clarity on such secondary discount, how much you will give. Is the customer aware of it? No. Now, such discounts are not reduced from the sale price, then ITC is not to be reversed. But when you give the primary discount, you're passing on the discount to the buyer. So you have to reverse the ITC by the recipient. Now I'll explain this. I think we had discussed this, right? In the discounts. Can you explain free sample point in हिंदी? हाँ, समझाते हैं. So free sample point का मतलब क्या है कि जब भी मैं sample और free gift देता हूँ, क्या उसके ऊपर मुझे GST रिवर्स करना पड़ेगा? ये चीज ये सी है कि जब आप शेड्यूल 1 सप्लाई में जाएंगे, शेड्यूल 1 बोलता है कि अगर आप कुछ डिस्पोज करते हो विदाउट कंसिडरेशन, तब भी वो सप्लाई है और उसके ऊपर आपको जीएसटी पे करना पड़ेगा. तो अगर आप शेड्यूल 1 में कुछ भी डिस्पोज करते हो और आप आउटपुट टैक्स भरते हो, इफ यू आर पेइंग दैट आउटपुट टैक्स, तो फिर आपको आईटीसी क्लेम मिलेगा. आईटीसी को रिवर्स करने की जरूरत नहीं है, क्योंकि आप आउटवर्ड सप्लाई, मेन मुद्दा क्या है? मुद्दा यही है कि आप जब इनपुट सर्विस लेते हो, आउटवर्ड पे आप टैक्स नहीं भर रहे हो इन केस ऑफ अ फ्री सैंपल, तो इसीलिए रिवर्स करने के लिए कहा है. लेकिन आप उस फ्री सैंपल पे शेड्यूल 1 के बेसिस पे अगर पे कर देते हो, तो फिर आपको क्रेडिट क्यों रोकना चाहिए? नहीं रुकेगा. तो अगर आपका आउटवर्ड सप्लाई पे आप जीएसटी पे करते हो, तब आपको आईटीसी क्रेडिट रिवर्स करने की जरूरत नहीं है. आईटीसी आप नॉर्मली क्लेम कर सकते हो. ठीक है. नाउ ऑन दिस कॉन्सेप्ट ऑफ डिस्काउंट एंड सेकेंडरी डिस्काउंट, लेट्स आई विल शेयर विथ यू एन एक्सेल शीट. ओके. डिस्काउंट कैसे होता है? सप्लायर एंड बायर. Supplier is selling for 10,000 rupees. He is charging 18% GST. Okay. This is called as outward supply. This is the GST payable. ठीक है. Now the supplier is supplying it to a buyer. Okay. So buyer के लिए क्या हो जाएगा? What will this be to a buyer? Input supplies. correct, or inward supply, which is to the extent of 1000 rupees. And this 180 will be GST component, correct. So GST component को क्या कहते हैं? Is that similar concept of value of supply? Yes, yes, same concept. GST receivable नहीं, इसे कहते हैं आउटवर्ड सप्लाई फॉर द सप्लायर, और इनवर्ड सप्लाई और उसके ऊपर टैक्स को ही तो इनपुट टैक्स कहते हैं. दिस इज कॉल्ड इनपुट टैक्स क्रेडिट. दिस इज कॉल्ड एज इनपुट टैक्स क्रेडिट. Now, when I supplied 1000 rupees, 180 was payable, so he's claimed the ITC. Now, प्राइमरी डिस्काउंट में बोलता हूं कि व्हेन आई सप्लाई, कि अगर आप वॉल्यूम परचेज करते हो, इफ यू बाई गुड वॉल्यूम ऑफ गुड्स, आई विल गिव यू 10% डिस्काउंट. Okay, so this buyer has fulfilled all the conditions, so I gave him discount. This is sale price, and I have to give him discount of 10%. Now, if I give him discount of 10%, so this much I will reduce from my turnover, because I will get 100 rupees less. I've sold him 1000 rupees. I will give him discount of 100 rupees. He will pay me balance 900 rupees. So my net sale is how much? 100 minus 1000 minus 100. So 900 is my net sale. On this GST, I have to revert that 18%. And so here also my GST payable will be 162. Correct? Now what is happening? 180 I have sold and 18 I have reduced. So I will pay to the government 162. So when I pay to the government 162 rupees and the buyer claiming credit of 180, is this correct? 162 paid and 180 claimed. Is it correct? Correct. It is not correct. So what the buyer has to do is he has to reverse the ITC to the extent of my credit note value. He has to reverse the credit note and claim the net ITC after the deduction. Then both will be matching. So that is what it is saying, that in case of a discount which is given, okay, which is called as primary discount, that credit, whatever is there, has to be reversed by the receiver. If it is reversed by the receiver, then I can reduce it from my sales value. Otherwise, I cannot reduce, because if I reduce, he's already claimed more credit. There'll be a mismatch. So when I am selling something, I have to reduce credit to the extent of the credit note which I give. But in secondary discount, what happens? Sale price again is 1000. Okay. For the buyer, it is same. But this discount, I will not get the benefit, because I will reduce 1000 from my sale price. But we know the conditions of discount in the sale value. In the valuation chapter, we will read that what we have already read in the valuation chapter, that it has to be a discount which satisfies all the conditions. In this case, it is not satisfying the conditions. So I will not reduce from my tax payable, and even the buyer will not reduce from his input tax credit, because this is a discount which we didn't decide. That's why I will not reduce. He will also not reduce. Clear in this sheet? Are these discounts given to collect payment from buyers? Um, Possible, because they say that they are called as prompt payment discount, saying that if they make the payment within 50 days, we'll give a discount. There can be such instances, or there could be instances on meeting some target. Anything can happen. Various types of discounts. The primarily thing is we will reduce from the sale price only those discounts which you have agreed with the customer. If you have agreed, then you can get the benefit. If you have not agreed, you will not get the benefit. It'll, yeah, in terms of value, Sejal, it will create difference. But such credit notes, technically, you should not upload in your GST returns also, because these credit notes are called as commercial credit notes, not actual GST credit notes. So you will not upload in the GST returns. There'll be a difference between the GST returns and books. That is justifiable because your sales in your books will be less. In the sales in your GST returns will be high. We can prove that these are not discounts which is within the time. So we have not reduced, we have paid more GST. That will be acceptable. Another situation is when, again, a clarification is what happens in case of ITC reversal on return of expired medicines. Because when you supply something, you have to have the responsibility to get it back if it is expired. So you have given some medicines. Now distributor is having it. Distributor is giving it to a retailer. Now it's expired. It will come back to the manufacturer. So what happens in that case? Return can be made by a retailer, wholesaler to the manufacturer, either by raising a credit note or treating the same as fresh supply. Two options: the wholesaler, the wholesaler or a retailer will have is when he's returning this goods back, he can raise a credit note, which is the supplier can raise a credit note or the retailer can issue a invoice. Okay. So there are two options possible, that when the return is made, you treat it as a fresh supply and the retailer can raise an invoice, or this supplier can raise a credit note. When a registered person buying medicines, he will raise an invoice for return based on the original invoice received. The wholesaler or manufacturer shall be eligible to claim the credit because they are getting an invoice, they can claim a credit. In case of a composition taxpayer, he will issue a bill of supply and pay tax. But we know that in case of a composition taxpayer, we cannot claim the credit. So credit will not be available. Various situations. That is, if these are all from the perspective of the ultimate retailer. Now, when the retailer wants to return back the goods, if he is registered, he will raise an invoice and manufacturer will get the credit. If the medicine pharmacist is a composition taxpayer, then he will raise an invoice and GST will be payable on that, credit will not be available. That will become an extra cost. Tax will be the extra cost for this retailer. If it is an unregistered person, then he will not charge GST. He will only raise a commercial invoice because he cannot issue a tax invoice. Now, for the manufacturer's perspective, once he is receiving the goods, on destroying the medicines, because he has to destroy it, it is expired goods, he cannot reuse it. He will destroy these goods. Once these goods are destroyed, he will reverse the ITC on the return supply and ITC availed on manufacturer. So, whatever is the ITC availed, he will have to reverse because these are all expired goods stolen. Now he's destroying those goods. On destroying, whatever input tax credit is there, that has to be reversed. Clear with this? So we'll go to the next aspect of this chapter, which is credit in special circumstances. Okay, we'll take a break of 10 minutes and then we'll go to this credit in special cases topic. So can we continue? Okay. So now what happens in terms of input tax? You claim the credit under 16. Whatever is reversal, you have done reversal under 17. Now we'll come to 18. Section 18 says that in special circumstances, you have to claim the credit or reverse the credit. What happens? We know that a regular person can go to composition and a composition can come to regular. A person who is providing exempt services due to change in rate may become a taxable supplier. In such situation, what all can happen is what this section 18 will talk about. Section 18 tells that what all credit we can claim. Okay. So firstly, we will go to 18.1a. There are four situations majorly. We'll go one by one. First is 18.1a says that what happens in case of ITC on opening stock. ITC on opening stock of inputs at the time of new registration. So you have taken a new registration. You were not registered till now. You have taken a registration now. So a person who is applied for registration within 30 days, because once you cross the limit, you have to apply within 30 days. Now, such person who is applied on time, he is a smart person. So he will get the benefit. So 18.1a says for a person who has applied for registration within 30 days from the date on which he becomes liable to registration and has granted such registration cell, he will get the benefit of taking input tax credit in respect of inputs held in stock, inputs contained in semi-finished goods, and finished goods when on the day immediately preceding the day when he becomes liable to pay tax under the provisions of this act. Matlab, person for taking registration in the state of a major states, metro state, the limit is 40 lakhs. Now, once he crosses 40 lakhs, he's been very clever. He's been very cautious and applied for registration. He's applied for registration and he got the registration. So he's applied on time. So whatever stock he had prior to this, okay, up to 40 lakhs, what business he did, he has sold something, but some stock were lying with him. Now, on that stock, GST he has paid. Has he claimed the credit? No, he didn't claim the credit because he was not registered. But once he is registered, he will claim the credit on such stock on the basis of invoices because supplier will give him invoices with GST. Now he can claim credit on that closing stock, which is the opening stock for me. The closing stock before the date of registration, which is the opening stock as on the date of registration. That stock he will have to give the details. What all stock he can take credit of? Inputs, that is raw materials. Raw materials, then other inputs which is coming in semi-finished goods, which is in process. Work in process stock, that also he can claim. And finished goods, even on that, whatever is the raw materials on which credit is there, he can do the costing and claim credit on all of these three. So ITC on opening stock, if he applies within 30 days, he can claim. If he's applied late, after 30 days he's applied, he cannot claim the credit. So if he's applied for registration within 30 days, he can claim the credit. That is 18.1a. Second is 18.1b. This is for a person who is not liable for registration, but he voluntarily applied. His turnover is still 10 lakhs. The limit is 40 lakhs, but he said, no, I want to go for voluntary registration. Good. Go for voluntary registration. You will also get the benefit. So a person who obtains voluntary registration is entitled to take credit of input tax in respect of inputs in stocks, inputs contained in semi-finished goods, and finished goods which are held on the day immediately preceding the date of registration. This fellow also will get, but here he does not have any timeline that he should apply within so and so time. So he can apply anytime, correct? So whenever he applies, the date of registration which he gets just one day before that, whatever is the stock, on that stock, he will get the credit. In 18(1)(b), which stock he was getting? He was getting, the date was different here. In 18(1)(a), the date is the date from which he becomes liable to pay tax because he's applied on time. That will become the date on which he is liable to pay tax. But in 18(1)(b), the day immediately preceding the date of registration. So there's a difference between 18(1)(a) and 18(1)(b). Then 18(1)(c) says, ITC on opening stock if a taxable person switches from composition. So he was under composition scheme. He was paying tax at lower rate and no credit was available. Now he is applied on time, and from beginning of the year, he is moving from, because composition scheme to from composition scheme to regular scheme, he can come anytime. So he's completed the threshold limit for composition, we know, is 1.5 crores. Now he's touched 1.5 crores. Now he's coming under regular scheme. So if he comes from composition scheme to regular scheme, then whatever is taxable supplies he's making now, on that GST is payable. So he should definitely get the benefit of GST on his stock. So whatever stock is lying for a composition scheme person, he will get the credit. Again, here he will get the credit of inputs held in stock, inputs contained in semi-finished goods, and inputs contained held in stock, and finished goods held in stock. Apart from that, additional thing what he'll get is capital goods. He will get the credit of the capital goods as well, because this is a scheme specifically. So this section 18(1)(a) and 1(b), you will get only inputs, semi-finished goods and finished goods. 18(1)(c), when you're moving from composition to regular scheme, you will get benefit of the capital goods also on the day immediately preceding the day when he becomes liable to pay tax under section 9. That is, when the day when you move out from composition to regular, that day's stock, you will get the benefit. Clear with this? Then last is 18(1)(d). When you are registered, but you are dealing in exempted goods till now, now that exempt goods has become taxable. Okay. In that case, you will get benefits of inputs in stock, semi-finished goods, finished goods, and here also capital goods, which were exclusively used for such exempt supply. So 18(1)(c) and 18(1)(d) cases, you are getting the benefit of capital goods also. Again, the date will be immediately preceding the day from which such supply becomes taxable. From the day it converts from exempted to taxable, on that you will get this benefit. Clear with this? I'll explain you in a different chart also. See, there are 4 situations when you are liable for registration and you cross the limit of 20 lakhs rupees. Say in case of services or in case of other states where we have to limit is 20 lakhs, you have crossed this and you apply for registration within 30 days and you obtain registration. Inputs, yes, available. Input services, not available. This is very important because you get credit of only inputs and capital goods. Inputs here means inputs in terms of raw materials, semi-finished goods and finished goods. All the 3 are available. Input services is not available to anybody. Capital goods is not available. From which day you have to consider? You have to consider from the day immediately preceding the date from which it becomes liable to pay tax. In case of a voluntary registration, inputs is available. This is not available. Capital goods also not available from the day immediately preceding the date of grant of registration. I think this you should take a print and memorize this. Very simple. You will always remember it. Third case is from composition scheme to regular scheme. Inputs is available. Input services, if you see in all the cases, input services is never available. But distinction here is capital goods is available. Similarly, the date will be day immediately preceding the day from which the supplier is liable to pay tax under regular scheme. From composition to regular, when you have converted that day. And when you're exempt supply and now coming to taxable supply, all inputs are available and capital goods also are available. Here the difference is only for capital goods which are exclusively used for exempt supply, and the day will be the day immediately preceding the day from which the exempt supply becomes taxable. Clear with this? I will share the notes over the class. Don't worry. For capital goods input already registration is compulsory. What is your question, Pooja? Didn't understand.
मीन्स सर कंपोजिशन स्कीम वाला भी ऑलरेडी रजिस्टर्ड होता है, एग्जेम्पशन वाला भी ऑलरेडी रजिस्टर्ड होता है, लेकिन ये दोनों अनरजिस्टर्ड होते हैं, तो ऑलरेडी रजिस्ट्रेशन कंपलसरी हो गया कैपिटल गुड्स का इनपुट लेने के लिए।
करेक्ट। सो कॉम्पोजिशन स्कीम में ऑलरेडी रजिस्टर्ड है और लास्ट केस में ऑलरेडी रजिस्टर्ड है, करेक्ट। लेकिन कॉम्पोजिशन स्कीम वाला इनपुट टैक्स क्रेडिट ले सकता है क्या?
नहीं सर।
कॉम्पोजिशन स्कीम नहीं ले सकता, तो उसने तब नहीं लिया है। अभी जब वो कॉम्पोजिशन से रेगुलर कन्वर्ट हो रहा है तब कैपिटल गुड्स का क्रेडिट ले सकता है।
यस सर, लेकिन वो मतलब ऑलरेडी रजिस्टर्ड है तो है जीएसटी में, मैं ये कह रही थी।
नहीं, अगर ऑलरेडी रजिस्टर्ड है तभी तो कन्वर्ट हो रहा है, वरना फ्रेश रजिस्ट्रेशन केसेस में तो उसको क्रेडिट मिलेगा ही नहीं। अगर वो ऑलरेडी रजिस्टर्ड है, क्रेडिट नहीं लिया है, अभी क्रेडिट लेगा। जैसे मैंने बिजनेस स्टार्ट किया है जनवरी 2022, तब मैंने कैपिटल गुड्स खरीदा है, तब से मैं क्या कर रहा हूं, कॉम्पोजिशन स्कीम में हूं, मैं क्रेडिट क्लेम उसका नहीं किया। अभी जब मैं कॉम्पोजिशन स्कीम लिमिट क्रॉस कर चुका हूं, मैं अक्टूबर से रेगुलर स्कीम में आता हूं। ओके, तो मेरे को फिर कैपिटल गुड्स खरीदने की जरूरत नहीं है। जो मैंने वो कैपिटल गुड्स खरीदा है वही मैं आज यूज करूंगा। तो उस कैपिटल गुड्स के ऊपर जो भी क्रेडिट है, जितना पीरियड यूज किया उतना कम करना पड़ेगा। वो मैं बताऊंगा आपको। जितना पीरियड मैंने यूज किया वो कम करके बैलेंस का इनपुट में ले सकता हूं।
ओके सर।
आपका क्वेश्चन यही था ना?
नहीं सर, मैं ये कहना चाह रही थी कि जो पर्सन ऑलरेडी जीएसटी में रजिस्टर्ड है वही केवल कैपिटल गुड्स का इनपुट मतलब बाद में ले सकते हैं, लेकिन जो रजिस्टर्ड नहीं है उनको नहीं मिलता कैपिटल गुड्स का मतलब इनपुट।
वैसा नहीं है। आप आधा ठीक बोल रहे हो कि जो ऑलरेडी रजिस्टर्ड है वही ले सकता है, करेक्ट। और जो रजिस्टर्ड नहीं है वो तो अभी खरीदेगा ना, बिजनेस
नहीं
शुरू
सर,
करने के वो तो खरीदेगा।
जो रजिस्टर्ड नहीं है जीएसटी में लेकिन जिसकी लिमिट क्रॉस नहीं हुई है, तो वो तो मतलब कैपिटल गुड उसने परचेज कर लिया होगा, लेकिन वो जीएसटी में रजिस्टर्ड नहीं होगा, तो उस केस में तो उसे कैपिटल गुड्स का नहीं मिलेगा।
उससे भी मिलेगा, उसे भी मिलेगा, क्योंकि वो इस कैटेगरी में आएगा एज वॉलंटरी रजिस्ट्रेशन या लाइबल फॉर रजिस्ट्रेशन।
तो
सो
उसे
अगर
कैपिटल नहीं मिलेगा ना सर।
करेक्ट करेक्ट, वो कैपिटल गुड्स नहीं मिलेगा। यस, यू आर राइट। जो अनरजिस्टर्ड है उसे कैपिटल गुड्स का बेनिफिट नहीं मिलेगा। यू आर राइट।
जो रजिस्टर्ड है उन्हें मिलेगा, जो ऑलरेडी रजिस्टर्ड
करेक्ट
है।
करेक्ट।
यस।
18(1)(b) is a grant of date of granting registration, means granting certificate of registration. Correct. So what happens is when you get a registration, you will have a column of the date of effective registration. from when is your registration effective from. So if that date is prior to the date of registration, that will come only in case you cross the threshold limit. But in case of voluntary registration, the registration is granted when the officer approves your registration. So when you get that registration certificate, from that date, you will get the benefit. Now, when you say capital goods, credit on capital goods shall be reduced by 5% per quarter and part thereof. So in this case of composition scheme to regular scheme are exempt to taxable. Only in these two cases, you are getting credit on your capital goods. Correct? So in this case, what happens is capital goods was purchased long back. Now you are getting converted to a taxable person. So how much credit you will get? You will get credit to the extent of the credit input on the capital goods. Then you have to reduce 5% for each quarter. So if I've purchased anything in, now we are in 2024, I have purchased some asset in January 2023. That time I was under composition scheme. Now I'm getting converted to regular scheme. So how much, if the value of the GST on that capital goods was 1 lakh, how much credit can I claim now? Correct. So उसके ऊपर कुछ क्रेडिट नहीं मिलेगा because the tax invoice should not be older than 1 year from the date of issue. Okay. And declaration of input and capital goods should be made within 30 days. Okay. So the tax invoice on which we are claiming the credit, in my example, I'm getting converted to composition to regular in October 2024. And in case of this ITC, this invoice is older than 1 year, so I cannot claim the benefit. Can you explain ITC on capital goods with example again? So yeah, I'll share a Excel sheet. So देखिए, I am getting converted from composition to regular. To regular on 1st of October 2024. Okay. So I am getting converted from composition to regular from 1st October 24. Now, from I had bought a capital asset on say 1st of December 2023. So this invoice ka benefit will I get or no? I will get because this is within 1 year. Now, 1st October 24, when I'm getting converted, on this I have to take the benefit. How much benefit I will take? I will take the benefit of 1 lakh less 5% per quarter. How many quarters have gone? December, it was purchased. December, January, February is 1 quarter. March, April, May, June, July, August, September, October, November. September, October, November also has to be considered because part of the quarter also has to be considered. So time lapsed is 4 quarters. Okay, so how much has to get reduced will be 1 lakh into 5% into 4 quarters. So credit ITC, credit or ITC on capital goods to be claimed is 1 lakh minus 20,000. So this much credit I can claim on 1st of October 2024. Somebody was asking that can I claim credit more than 1 year? Yes. In capital goods, we can. But in case of inputs, that 1 year will hold good. Who was telling that? सुजय मन्ना 1 ईयर का इनवॉइस पे पहले मिलना एसओपी आईटीसी मिल जाएगा, सब आईटीसी मिल जाएगा इन केस ऑफ कैपिटल गुड्स, लेकिन इनपुट्स है तो फिर 1 ईयर बैक देखना पड़ेगा. तो कैपिटल गुड्स पुराना भी हो, कितना भी पुराना हो चलेगा. मोर देन 5 इयर्स रहेगा तो फिर जीरो मिलेगा, बिकॉज 5% पर क्वार्टर मतलब वो 5 साल में खत्म हो जाएगा. करेक्ट. तो ऑन कैपिटल गुड्स पुराना भी रहेगा तब भी चलेगा. 5 क्वार्टर्स नहीं होगा. आप कैलकुलेट करके देखिए, अक्टूबर का पार्ट ऑफ द क्वार्टर भी आपको फुल क्वार्टर खरीद लेना पड़ेगा. ठीक है. नाउ वी क्विकली गो, वी हैव अंडरस्टूड दिस, और अपना एग्जाम्पल भी समझ में आ गया है. सेक्शन 18 क्लियर है. अभी 18.1, 18.2, 18.3 हो गया. अभी 18.4 जाते हैं. 18.4 बोलता है इज अ ऑपोजिट केस ऑफ 18.2. व्हेन उसमें क्या था, नॉन टैक्सेबल से टैक्सेबल बन रहे हो. अभी आप टैक्सेबल से नॉन टैक्सेबल बन रहे हो. दैट इज व्हेन अ रजिस्टर्ड पर्सन ऑप्ट टू पे टैक्स अंडर कॉम्पोजिशन स्कीम. मतलब वो रेगुलर में था, अभी कॉम्पोजिशन में आ रहा है, या फिर मेरा टैक्सेबल सप्लाई था और अभी एग्जेम्प्ट हो गया है. हो सकता है ना ऐसा. इन दैट केस व्हाट हैपेंस, ही शैल पे एन अमाउंट by debit in the electronic credit ledger or cash ledger, the tax equivalent to the credit in respect of inputs held in stock, inputs contained in work in progress, finished goods and capital goods on immediately preceding the date of occurrence of such event. ओके. तो जब भी वो एग्जेम्प्टेड टू टैक्सेबल में आ रहा तब उसका क्रेडिट मिल जाता है. नाउ व्हेन इज मूविंग फ्रॉम टैक्सेबल टू एग्जेम्प्टेड या फिर फ्रॉम रेगुलर टू कॉम्पोजिशन, सो जो भी क्रेडिट उसने क्लेम किया है उसको रिवर्स करना पड़ेगा. दैट इज क्रेडिट इन रेस्पेक्ट ऑफ स्टॉक. कौन सा स्टॉक? इनपुट्स हेल्ड इन स्टॉक, इनपुट कंटेन इन वर्क इन प्रोग्रेस, फिनिश गुड्स एंड कैपिटल गुड्स. अगेन कैपिटल गुड्स में 5% क्राइटेरिया रहेगा. देन ही विल हैव टू reverse the credit. Sir, one doubt, if I have invoice on capital good which is more than 1 year before from the date of registration, can I claim ITC? Yes. That's what I'm clarified. Yes, you can claim it. That 1 year limit applies only in case of inputs and inputs. That's all. Input in raw material or finished goods. But for capital goods, that 1 year limit does not apply. Now, this you understood. Reversal on ITC on switching from regular to composition will be ITC on input shall be reversed proportionately on the basis of invoice. If invoices are not available, Purana invoice ho gaya, then what you have to do? ITC can be revised on the basis of prevailing market rate. Then on for capital goods, जैसे आपने pro rata basis लिया है 5% per quarter, वो same लेना पड़ेगा, saying that you have used for that many years, balance is what you have to reverse. Then ये सब करने के बाद what is left in your ECRL, which is your electronic credit ledger, or ECL, which is your electronic cash ledger, that also has to become zero. So you have to debit the balance what is available in your electronic credit ledger and cash ledger by this amount. And then any balance what is lying shall lapse. So you have to debit, make the payment of these amounts of reversal of ITC on inputs or reversal of ITC on capital goods from your credit ledger. Credit ledger short पड़ता है तो cash ledger. पूरा डेबिट कर दिया and something is left out, that also will become lapse. जैसे you have credit balance 1 lakh rupees, you have to reverse 80,000 rupees. You have reversed 80,000. Balance 20,000 is lying. That also will lapse, that you cannot carry forward. Fine. You have to reverse 1 lakh, but आपके credit balance में है only 80,000. So you will reverse this 80,000, 20,000 you have to pay by cash because you have excess utilized. So this is the minimum reversal which you have to do. Above that, whatever is sitting as balance, that will lapse. Whatever shortage is there, that you have to pay by cash. Clear? Sejal, in this revision, we will not have time for doing numerical calculation. We will try to do it in the problem solving session. Okay. Now, what happens in terms of cancellation of registration? When your registration is cancelled, then you have to reverse ITC on your input stock semi-finished goods and reverse on your capital goods. And you have to pay output tax on such goods. So when you're closing down your business, you cannot have any credit balance or things like that. Whatever you have to pay output tax on the goods which is lying, you have to pay. Either sell those goods. If they're not able to sell the goods, whatever is the stock lying on that day, on that you have to pay GST. And then whatever is the credit ledger balance, that has to get reversed. Okay. What happens in case of sale of capital goods? Okay. Now, what we have said is on the capital goods, you will get the credit, full credit you will get on your capital goods. But are you using the capital goods like raw materials so fast? No. Capital goods or fixed assets are there for a longer duration. So in the Income Tax Act and in the Companies Act, life of the asset is defined. But in GST, you do not have different life for different assets. All the assets are treated as having a useful life of 5 years. All the assets, computers, laptops, software, machinery, everything, all the capital goods are assumed to have a life of 5 years. So once you have a life of 5 years, under straight line method, 100 divided by 5 is 20, 20 for each year, which means 5% per quarter. So it is assumed that you are claiming the credit at 5% per quarter. So when you're bought a capital asset and you're selling it, you have to pay GST at what rate? ITC should have been availed firstly. So firstly, if it is a motor car or any of those assets which has blocked credit, there you have not claimed the credit. So there you have to pay GST value on the sale value. But if you have bought any asset which is capitalized other than the block credit and you have availed the credit, then tax payable will be higher of the two, which is ITC taken on the capital goods, which is reduced by 5% per quarter of a year or part thereof. So you have to calculate sale value, or you have to take the ITC and reduce 5% per quarter. Whichever is higher is what you have to take. Again, I will explain this with the example. But understand that ITC, what you have to pay will be the higher of on your tax on your transaction value or ITC taken on capital goods less 5% per quarter. So let's take the example. This is over. Okay, this is separate. Now next separate. Sale of capital goods. Okay, you have bought a asset, say furniture. On 1st of January 2023. Value and ITC what you have claimed. You have bought a asset for 1 lakh rupees and ITC is at 18%. So you have claimed ITC of 18,000. Now there is a sale of this furniture on 1st of October 2024 for a value of 60,000 rupees. Now the question is, how much is the tax payable? Can you calculate and tell me? I hope you're all doing the calculation. Okay, let me help you. It says that ITC availed less 5% per quarter of a year or part thereof. So how many quarters are completed? From January 23 to October 24. 23 you have 4 quarters and October another 4 quarters. Shoaib is saying 60,000. Let us see. So we have completed 4 plus 4, 8 quarters. Okay. So what is the reversal we have to do is 1 lakh into 5% into 8 quarters. That is 40,000 reversal we have to do. Okay. So this is falling coincidentally under the same value. So we will not get the differentiation. Let's make it as at 70,000. Then it will be clear. So you are 40,000 and ITC. We have to take ITC value. That will be better. We'll take 18,000 into 5% into 8 because we have to reverse the tax, not the value. So we will reverse 7,200 from 18,000. Net reversal, net ITC after reversal is 18,000 minus 7,200 or GST payable on outward supply, whichever is higher. So on this 70,000, when you purchase, it was 18%. So when you sell also, it's 18%, whichever is higher. So you have to pay GST payable on sale of furniture is 12,600. Okay. 10,000 each. Yes. So what is the GST payable? Whichever is higher. Clear with this? Any doubts on this? Okay. So now let's come back to our presentation and quickly finish this. So ITC is payable, which is higher of this or this, like in our example. And in case of refractory bricks, molds and dies, jigs and furnitures, which are supplied as scrap, tax may be paid on the transaction value. There you don't have to do a comparison with the ITC reversal. Okay, in case of these specific refractory bricks, molds and dies, jigs and furnitures, which are supplied as scrap. In my example, it was not supplied as a scrap. It was sale of furniture. Okay. So there you will pay tax either on the transaction value, only on the transaction value, no comparison with ITC reversal. Now, what happens in case of ITC, in case of change of constitution? That is when you are selling the company, when there is a sale, merger, demerger, then you will transfer whatever is the unutilized ITC to the new entity. So if you're selling to the sold entity, if it is getting merged to the merged entity, in what proportion ITC shall be in the proportion, in the ratio of the value of assets of the new units in case of a demerger scheme, and transferor to submit a certificate from a chartered accountant, and transferee, the person who is transferring, he will file a form called Form GST ITC 0. Okay, this is how the transfer happens in case of a change of constitution, sale, merger, demerger, amalgamation, lease or transfer of business. The ITC will get shifted. Now there are special circumstances where transfer of ITC on obtaining separate registration. So if you had one registration, now you're taking one more registration. That is, you had one head office, now you're opening up a branch. So when this branch is getting opened, some of the assets also is getting transferred. So what happens is the transferor can transfer the unutilized ITC lying in electronic credit ledger to any or all transferee. Okay, that is within the same PAN, in the ratio of value of assets held by them at the time of registration. Value of asset means, but it should be within a state. From one state to another state, you cannot transfer. Within a state, if you are opening one more branch and taking separate registration, then on the basis of assets, you can give them some benefit, correct? So generally, we have seen that anything when it is getting transferred, you give some asset to them, right? So that they can sustain. So similarly, GST is saying whatever assets you're giving to that entity, ITC in relation to that, you can transfer. The value of, on the what basis? On the ratio of value of assets held by them at the time of registration. You had 10 machinery, now 2 machinery that new unit is taking. So in the ratio of 2:8, you can transfer the credit. The transferor must furnish the prescribed details on their common portal within a period of 30 days, and transferee shall accept and the amount will get credited, because transferors will ask and the transferee will accept it on the portal. Now, next is ITC utilization. How you can utilize the input tax credit is stated here. Yes, Sejal, you can use this formula for solving your exams also. IGST credit can be utilized for payment of IGST output tax And if something is left, you can utilize for payment of CGST and SGST. This can be in any proportion, not necessarily that full CGST, then SGST, not necessary. 10% CGST, 90% SGST, any proportion that is possible. Then any CGST ITC can be utilized for CGST liability and then can be utilized for IGST. SGST, IGST can be utilized for SGST payments and then for the SGST for any IGST liability. CGST cannot be utilized for SGST. SGST cannot be utilized for CGST. Apart from that, this can be utilized. CGST, ITC used for CGST first, then with IGST. But IGST can be utilized for I, then CRS both. That is utilization of credit. Now, there is some restriction on utilization of ITC. Whatever ITC is there, I can utilize, yes. But where the proper officer has reasons to believe that the credit of ITC in the credit ledger you have taken fraudulently, then he can impose a restriction. Because ITC, sometimes what people do is they take it in a fraudulent manner. To block that, there is a special given to the proper officer saying that if you find that the credit is fraudulently taken, then you can impose restriction. What is that restriction? Restriction can be imposed by the commissioner on utilization of the ITC for claiming, saying that they will block your credit. You cannot utilize. Okay. The credit of input tax has been availed on the strength of tax invoice issued by a non-existent supplier. You have bought it from a person who didn't exist, but you have got the credit. Or by a person not conducting any business. They find that from whom you have bought, that person is not existing. Or you have got the credit without actual receipt of goods. These are all called as fake fraudulent ITC. So all such fraudulent ITC, if you have availed, then your credit will be blocked. Or the tax in relation to which has not been paid. Supplier has shown it in his GSTR1 but not filed 3B and he is not found. Then the registered person availing the credit has found non-existent or not to be conducting business, then restriction will be imposed saying that your credit is blocked for 1 year, you cannot use your credit. So, or in this 6 situations, the registered person availing ITC is not in a position of tax invoice. You should have one of the conditions of availing creditors, you should have a tax invoice. Now, if you don't have, then your credit will be blocked. Okay. So in these 6 instances, when the officer finds it under Rule 86A, he can block your credit. Then there is another restriction under 86B. 86B says that the ITC available in your electronic credit ledger for discharging your output tax liability, there is a restriction which says that if you are a supplier and you have a taxable value of supply more than 50 lakh rupees, then other than export supply and zero rated supply, if your monthly taxable value is more than 50 lakh rupees, then you should utilize input tax credit only to the extent of 99%, which means full ITC you cannot utilize. You have to utilize 99% and 1% you should pay from your electronic cash ledger. Why so? Because the bank account will get traced with the GST department. So they're saying that, okay, we are not blocking full credit unlike 86A, but if you are a big taxpayer and your value per month itself is more than 50 lakhs, you're a big enough person. So you pay 99% through your electronic credit ledger, 1% through cash ledger. No, I cannot do it. So then the government said, okay, we'll give some exceptions. We'll give some relaxations, wherein if you are a proprietor or a managing director are paying income tax more than 1 lakh rupees, then you are genuine. That rule will not apply to you. Or if you have received refund from us for your export of services, for your SEZ supply, for whatever reasons, for your inverted duty structure, you've got a refund more than 1 lakh rupees, then also it's fine. Then they're saying that if the registered person has discharged liability towards output tax in any month more than 1%, saying, okay, this month you have utilized, but any previous months you have utilized, you have paid more than 1% in cash, then also it's fine. And if you're a government department, public sector, or local authority, and the commissioner of an officer has authorized him, then this restriction can be removed. But generally, more than 50 lakhs, if you have any turnover, then you have to pay 99% from your electronic credit ledger, 1% through cash. If you want to not use it and fully credit ledger, then you have to see whether you are paying income tax more than 1 lakh rupees, or you have claimed refund, or in any previous year, previous month, you have paid more than 1% of the tax from your cash ledger. Okay, that was all in terms of the input tax credit chapter. Now we'll take some questions and some MCQs. Mr. A has purchased, okay, this is the correct question. Mr. Manish is a chartered accountant whose turnover exceeds 20 lakhs on 10th August, and he becomes liable to registration under GST. He applies for registration on 25th August, and he gets a registration certificate on 28th August. Now, if he purchases a laptop on 16th August, whether he is eligible to take the credit of ITC? No, he is not eligible. No, because 18(1)(a), since the registration is taken within days, he is leaving able to or ITC. Okay. So the correct answer is he gets registration on 28th August, but effective date of registration will be 10th August, because who has taken the registration on time, and he will be deemed to be registered from 10th August. So that's what I was saying. Even in case a registration date is given later, the effective date of registration will be there. If I have applied on time, then 10th August will be the effective date of registration. Hence, inward supply after the effective date of registration will be eligible. So there are two dates. One is date of registration, which is 28th August, but effective date of registration will be 10th August. So any purchases after 10th August, he is eligible. Now some MCQs. One, the answer is B, last lot. Correct. Let me underline, there's a lot of confusion within B and D in the other class. Payment for the invoice to be made within how many days from the date of issue of invoice to claim the credit? Everybody knows it. It is 180 days. Third question. Three. Okay, there's confusion between C and D. Answer is D. In all the cases where supplies on which tax is payable under reverse charge deemed supplies without consideration, addition made to the value on account of supplier's liability in relation to which is incurred by the recipient. In all of these cases, the 180 days limit does not apply. Question number 4. Fourth one, D. Correct. Both B and C. Fifth one, again with the majority saying it is C. Yes, correct is C. CGST, then IGST. Question number 6. Sixth one, yes, most of you have given it correct. Sixth one is C. Seventh one. Oops, already 5:30. Let's be quick. Seventh one. Seventh one, yes, in all of the instances. So answer is D. In anything is possible. Very tricky question this is. Not C. Most of you have given correct, wrong answer for this previous question. It is D because this is also possible, this is also possible, and this is also possible. Registered person claims depreciation on tax component. The input tax credit on the said component, is it allowed or not allowed? Eighth one, B. It is not allowed because you have claimed depreciation on the tax component also. So you cannot claim double benefits. So answer is B. Correct answer is B. He can claim on the basis of invoice and the bill of entry. Okay. Ninth answer is D. And the last MCQ. ITC shall not be available in case of motor vehicle or transportation of seating capacity. What's the answer for 6? Okay, first answer this, then we'll go back to the 6. In this ITC, what do you think? Tenth one, D. Correct. So 10th answer is D. Somebody was asking question for answer for question number 6. 6, it is basic customs duty and IGST. Okay, so that was a very good learning on input tax credit. I hope you have understood input tax credit thoroughly. Not much of statutory updates, but in our next session, we will take any updates and then we will proceed further because we didn't have time to go through the updates. So we'll start with the updates and then proceed further. It will be done in the problem solving session at the end of all those things because in problem solving, we have to consider all the chapters. That's why we will go through all the chapters, understand the basics, and then we'll go to the problem solving session. Okay. Thank you very much. See you in the